How much Ethereum do you need to be able to retire in 10 years? What does it even mean to retire, right? Are we talking about $50,000 a year basically being able to cover your mortgage and some other bills? Or are we talking $1 million? We're going to be laying out different scenarios and how much Ethereum you'd need based on how high it's going to go in the future. And we're going to break that all down. And the cool thing about this is you can plug in your own assumptions, right? If you think Ethereum's going to go to $10,000 in 10 years, well, you can look at one set of numbers that I'm going to show you today. If you think Ethereum's going to be $100,000 in 10 years, you can look at a totally different set of numbers. Now, I recently did this with Bitcoin, and people really liked it. We got a ton of views, and a lot of people said that they wanted to see more. Let me know if you want to see other cryptocurrencies in the comment section down below the video. If you want to see this video, I'll put it on the end screen, this Retire on Bitcoin. And then also, if you want to see videos in the future, hit subscribe if you haven't done that already. Now, of course, we are assuming a couple different things. First of all, Ethereum's price is around $1,528 right now. In these assumptions, I put the price as $1,550. So if you're watching this a couple weeks from now and the price is up a lot or down a lot, it could change a little bit. As of now, though, these numbers are pretty darn accurate. Also, I'm not saying to go out and buy Ethereum or to sell Ethereum or anything like that based on these numbers. And I'm not saying that it's going to be easier to retire on Ethereum, even if we go up a lot, right? If Ethereum 10x's, you're still going to need a lot of money to retire on Ethereum. Just keep that in mind. Now, usually when you talk about retiring, a lot of people use the FIRE method or the 4% rule. Basically, if you have $1 million in some retirement account, you can withdraw 4% annually. But that's a little bit different right now. We're talking about Ethereum, and the supply decreases each year. The staking rewards increase. The supply decreasing actually just it pushes up the price, and the staking rewards are given directly to you, almost like a dividend. So I think we can change the assumptions a little bit for the safe withdrawal rate. Now, you could change this. I could change this to something else. In the previous example with Bitcoin, I assumed a 4% withdrawal rate or a 5% withdrawal rate, depending on how aggressive you want to be. Here, we're going to assume something a little bit different, which we'll get into. We're also going to assume that the ETH supply decreases by 1.5% annually. Now, right now, if you didn't know this already, Ethereum is actually decreasing in supply because of the recent proof of stake merge, basically causing Ethereum to be deflationary, almost negative 0.1%. Now, I'm going to assume that it's going to be deflationary by 1.5%. And the reason for this is because we're going to have a lot more activity on the network or on Ethereum 10 years from now than I think we are going to have right now, especially because we are in a bear market. I think there's going to be a lot more usage, and that will cause the supply to decrease a lot faster. Again, we're going to assume staking rewards are at 2%. Now, it's much higher than that right now. It's like 4 or 5%. But we're going to assume more people are on the network. There's less rewards for staking. And going through the different retirement scenarios, we have 5 different scenarios. One is coasting FIRE. Basically, this is saving up enough money to be able to retire at some point in the future based on that amount of money still increasing in value. So we're going to assume for coasting FIRE that by 2033, you're going to stop investing into Ethereum. And then you're going to let it sit there. It's going to grow by 10% annually for 20 years. Now, of course, Ethereum might grow by a lot more than that, but we're going to assume 10%. And then 20 years after that, so 2053, you're going to go into traditional FIRE, basically being able to take out $100,000 in annual expenses. But if you want something a little bit more aggressive, right, you want to actually retire in 10 years, lean FIRE would give you $50,000 a year in expenses. So you'll be able to cover probably your mortgage, car payments, that kind of thing. So basically just the things that you need to have in life. So not, extravagant vacations or anything like that. Then traditional FIRE, basically being able to quit your 9-to-5 job. We would say $100,000 in annual expenses. Now, for some people, that's not going to be enough. For some other people, that's going to be way too much. Keep in mind, this is in the future, so there probably will be a little bit of inflation by 2033. Fat FIRE, we're going to assume $250,000 in annual expenses. And then Filthy Rich FIRE. This is assuming that you want to spend $1 million a year, and maybe you have a $30,000 mortgage, $10,000 worth of car payments, you do some traveling, and you eat out a lot, you can get up to $1 million a year if you really want to. That's a lot of money to be spending, though. I don't spend anywhere close to that, and I live a great life. So depending on where you're at, maybe you have to spend a lot more money. So we're going to throw that into this scenario. Now, we're going to look at different Ethereum prices, right? Right now, again, we do have some deflation. We're going to assume, and we're going to actually calculate this price, and we're going to show what the equivalent would be if it was in today's Ethereum based on the supply chain. So basically, in 2033, we're going to look at these different scenarios. If Ethereum goes up to $5,000, so just barely more than it did at the end of the last market cycle, the last peak, we went up to 4,800 or so. Now, we're going to have deflation, like I said, each year of 1.5% in this spreadsheet. So that would be basically the equivalent of 4,300 today, because again, there's going to be some ETH taken out of the supply. Then 15,000 is going to be the next price target, or the next scenario, basically a 3x from the last market peak. But again, that's equivalent to about $13,000 today, and 40,000, 80,000, and 160,000 will be the other scenarios. Now, you can look at specific numbers for whatever you think is most likely. Keep in mind, this is 10 years into the future, so we're going to have 3 more bull cycles by then, and even $160,000 Ethereum, keep in mind that's pretty darn bullish, right? That would be about the equivalent of gold's market cap if gold just appreciates 3% a year over the next 10 years. So maybe Ethereum moves up to Bitcoin's market cap, and Bitcoin finally hits gold's market cap in the next 10 years, and we're having that flipping happening. Well, that would be, again, Ethereum basically being $160,000. So yes, it is bullish. It's assuming that Ethereum eventually flips Bitcoin and Bitcoin flips gold, and gold slowly appreciates. But it's not like we're saying that Ethereum's going to hit $500,000 by next cycle or anything like that. So it is bullish, but I don't think it's a 0% probability scenario. I'd say it's closer to maybe a 3 to 5% scenario. And that's, again, just my opinion. I should leave my opinion out of it, but I just want to be clear on some of the assumptions here. So let's get into some of the numbers. Now, this is going to be one of the harder scenarios for a lot of people to get to. We're going to break down how to make this a little bit easier here in a minute. But what if you want to be filthy rich? You want to hit the filthy rich fire. And keep in mind, we are going to assume 2% staking rewards. We're actually going to assume a 3% withdrawal rate. So the value of your Ethereum is going to continue going up more than 3% most likely. Usually we consider a 4% safe withdrawal rate, but we're going to assume 3%, but we're also getting 2% staking rewards. So it's equivalent to about a 5% safe withdrawal rate. So I think that some people might have issue with that, but I think that makes sense for now. Of course, we could change the staking reward amount up because it's closer to 4% right now, but we're going to assume that you can, again, withdraw 3% of your Ethereum, but then you're also withdrawing the staking rewards each year. So that would be, again, equivalent to about a 5% withdrawal rate. So in the filthy rich scenario, if Ethereum's only going up to $5,000, right, you still need a ton of Ethereum. We'll break down how much this is in today's dollars here in a minute, but you're going to need about 4,000 Ethereum. And that makes sense, right? Ethereum's only going to go up about a 3x in the next 10 years. You would need a lot to buy, or you would need to buy a lot of it now to be able to retire because it's not actually appreciating all that much. Of course, that's better than most investments, but a 3x on Ethereum in 10 years from the bottom of a bear to a bull market it's pretty small. Then if you want to be filthy rich fire, let's say Ethereum goes up to $40,000. Well, you need about 500 Ethereum. So you'd still need a lot of Ethereum if you're going to retire and you're going to spend $1 million a year. Keep that in mind. But what if you don't want to spend $1 million a year? Because that's kind of crazy, right? And you assume Ethereum is going to go up to $40,000. So basically, was that a 25x or so from here, 30x? Well, you need 125 Ethereum. So we would be able to withdraw, again, that 3% a year, get those staking rewards. You'd be able to spend $250,000 a year in annual expenses. Now, I realize that there's a lot of numbers here, so if you need to pause, feel free. You can take a look at some of my calculations. So if we want to do traditional FIRE, and again, you're retiring just on Ethereum, not any other assets, and you think Ethereum's going to 25 to 30x from here, up to $40,000, you'd need about 50 Ethereum. So again, that would be a significant amount. You need about $2 million in Ethereum at that point, but then you would be able to get a 5% withdrawal rate out to about $100,000 a year. So pretty achievable actually there. I mean, that's not, putting on $1,000 of Ethereum today and being able to retire in 10 years. I'm not trying to sling hopium or anything like that, but it is achievable, I think, especially if you are going to be buying this over the next 10 years. Now, what if you want just to hit lean FIRE? You need about 25 Ethereum. If you're assuming that we'll go up to $40,000 Ethereum. And then if you wanted to retire just coasting FIRE, so you want to stop investing 10 years from now, do you think Ethereum's going to hit $40,000 and then appreciate 10% a year? You need about 7.4 Ethereum by 2033. Now, I realize that some of these numbers are still really hard for people to hit, and it might be hard to calculate exactly how much money this is. So we'll show how much money this would take. But what if we want to be a little bit more aggressive, right? We have a 2% staking rate. What if it's 3%? Or what if you want to withdraw, 4% a year and then you get 2% staking? Well, we're going to assume that in this scenario, you can actually do a 6% withdrawal rate. So whether you have more staking rewards or whether you're taking out a little bit more each year, that would decrease the amount of Ethereum you need. So in this fat FIRE scenario where Ethereum hits, let's say 40,000, you'd only need 417 Ethereum versus 500. What if you want traditional FIRE? So instead of 50 Ethereum, you need 41.75. So you can see just a small change in the withdrawal rate can definitely change how much Ethereum will need. If you want to do coasting FIRE, you need 6.23 versus 7.46. Now, that might be very difficult for a lot of people, right? We're talking about pretty big numbers. It's also hard to calculate the cost. So if you think Ethereum's going to about 3x in the next 10 years, you need about $6.2 million worth of Ethereum today, in today's cost, to be able to retire at that time in the future, assuming a 5% withdrawal rate. Now, if we want to do something more like traditional FIRE, and you do think Ethereum's going to go up in price, and you think it's going to go up about 20-30x in the next 10 years, again, the equivalent would be about a $35,000 Ethereum here today. It would be still much smaller than gold's market cap. It would be about 1/4 of gold's market cap, assuming gold's market cap increases by about 3% again over the next 10 years. So still, we're talking about a $4 trillion or so Ethereum market cap. Well, you need about $77,500 today in Ethereum to be able to retire at that time in the future. Now, what if you just want lean FIRE, you want it to cover some of your expenses, and you think Ethereum's going to be a little bit more bullish, you think it's going to get up to 80,000, which is, again, a little bit less than gold's market cap here today. You don't think it's going to flip Bitcoin if Bitcoin's, around gold's market cap. Well, you need about $19,375 in Ethereum today, which would be the equivalent of about 12.5 Ethereum. Now, what if you were going to use the higher withdrawal rate scenario where you're actually withdrawing 6%? If you include staking rewards, maybe staking rewards are a little bit higher, or maybe you're withdrawing some of the initial Ethereum a little bit more aggressively. And again, we'll show how it'll be a little bit cheaper if you can buy at a lower price here. And we'll also show what it takes to be a bigger holder of Ethereum than the majority of Earth 10 years into the future as well. What if we're using the 6% scenario? So instead of $6.2 million today in Ethereum for filthy rich FIRE, assuming Ethereum's barely going to move up over the next 10 years, just a 3x, you need about $5.2 million worth of Ethereum. So that's a ton, right? But what if we think Ethereum's going to go up to this $40,000 and we want traditional FIRE? You need about $64,700 today doing that 6% withdrawal rate. And then super bullish scenario, you just want coasting fire. Well, if you think Ethereum is going to go up to 160,000 and then it's going to continue to appreciate at 10% annually for 20 years, you need about $2,400. So not that much. So we have to remember, though, there's a lot of compounding there. We're talking about 20 years of compounding after Ethereum's already hit $160,000. Now, I realize some of you might be thinking, okay, let's just throw in $30,000 or $10,000 into Ethereum and we'll wait it out. Keep in mind, though, I do think diversification is important. I'm not just going and throwing all my money into Ethereum because I think that's going to appreciate a lot over the next 10 years. I'm still diversified in other cryptocurrencies. I'm still diversified outside of crypto because there is a chance, right, that Ethereum is lower than it is today. And there's a chance of crypto in general not even being around in 10 years. Now, I don't think that's very likely, but it's possible. So I'm not throwing all my eggs in one basket. Now, what if you could buy at the bottom of the bear market, this past bear market, where Ethereum was around $900? Well, instead of needing $620,000 for you to be able to hit traditional fire, if Ethereum hits 5,000, you need 360,000. So a significant amount less than you needed up here. Almost half as much, right? If you think Ethereum is going to hit $40,000, you would have need to buy about $45,000 worth compared to, again, today's value of about $78,000. So if you can buy at a cheaper price, obviously it's going to be a lot easier to retire. And just to show you, the bottom of the 2018 bear market, Ethereum was only $82, and it would have cost you so much less to be able to retire at some point in the future, right? I mean, we are talking about 15 years instead of 10 years. But if you had bought about at the bottom, about $82, right? You would have had to invest about $33,000. And at the peak of the last bull market, you would have been retired. So invested $33,000, waited 4 years, and you could have been able to retire. Now, of course, the price of Ethereum has come down a lot, so that's something else to pay attention to. Usually, if there's more volatility, the safe withdrawal rate is a little bit lower, so we are using 3% in these scenarios. But keep in mind, you could be more aggressive or less aggressive with that. You would have not had to invest all that much because Ethereum almost hit $5,000. Again, you would have been basically retired if you use that safe withdrawal rate of 5%. So assuming Ethereum does hit $15,000, you would have about a $20 million bag of Ethereum, which is crazy. And again, you would be getting staking rewards. We have to assume that you're going to actually use staking rewards in a lot of these scenarios because some people will just hold on to the Ethereum and will never touch it again. They'll never put it anywhere to get staking rewards. But we're going to assume that in all these scenarios, because it makes it easier to hit our goals, we're going to assume that you are staking. Now this has all been pretty fun, but how much Ethereum will the average person have? I think that's kind of interesting to look at too. Right now, the Ethereum supply is about 122 million. The ETH supply in 10 years, assuming 1.5% deflation, is going to be 105 million. The population on Earth now is about 8 billion, give or take. And the population in 10 years will continue to grow. Right now, it's growing at about 0.84% a year. Assuming that happens for the next 10 years, we'd have a population of about 8.7 billion. And without any large holders of Ethereum, which keep in mind, there are a lot of people that have a large amount of Ethereum right now that are just holding, assuming everything was dispersed, all the Ethereum in the world was dispersed equally among everyone on Earth, we'd have about 0.01 Ethereum per person. Now, again, a lot of people are just going to hold on to Ethereum. I would be surprised if you could get 0.005 Ethereum when you take out all the people that are holding for the long term. So keep in mind, if you have one Ethereum, you're probably going to be much wealthier than almost everyone on Earth in 10 years, assuming the population continues to grow and the ETH supply does fall a little bit. You're going to be really wealthy in terms of Ethereum. Not many people are going to have as much as you are. Now, let me know your thoughts on all this underneath the video. Do you think this was helpful? I think it's a little bit more confusing than Bitcoin, where you just are assuming 4% safe withdrawal rate, because that's very similar to a lot of other retirement calculators. But again, there's more variability because of these staking rewards and the ETH supply decreasing as well. I didn't really account for the ETH supply decreasing too much besides just showing what the prices would be equivalent to here. But again, let me know if you want me to do more of these in the future. Share this to a friend if you want to, if you know that they would like this. And again, if you want to see that video on Bitcoin, I'll put it on the end screen. Thank you so much, and I'll see you in the next one. Bye.